Hey everyone, welcome back to Dinar Stories. If you've been part of this community for any length of time, you already understand what this space stands for. No fantasy rate predictions. No, it's happening tonight headlines. No emotional roller coasters built around rumors. Just real analysis, real context, and real conversations for people who have been watching this situation unfold for years. And before we get into the numbers today, I want to say something that matters more than any exchange rate. I see you. Whether you've been holding for 2 years or 12, whether you still check updates every morning with quiet hope, or whether you've trained yourself not to react anymore because you've been through too many cycles, I understand both ends of that spectrum. This journey pulls people between optimism and fatigue, between patience and frustration. Some days you feel steady. Other days you question everything. That's normal. You are not foolish for holding. You are not naive for watching. And you are definitely not alone in wanting clarity beneath all the noise. Now, let's talk about what actually shifted this week. Not a secret meeting. Not a coded message. Not a hidden announcement. But something structural, something subtle, something serious observers are paying attention to. And by the end of this video, you'll understand exactly what this week's exchange rate movement means, what it does not mean, and what truly matters going forward. What happened this week on the ground in Iraq, the US dollar saw mild upward pressure in the parallel market. Street-level exchange shops in Baghdad quoted rates hovering around 152,000 dinars per $100, with small variations between buying and selling prices. In Erbil, spreads were slightly tighter, but the overall pattern was similar, a modest strengthening of the dollar against the dinar in informal trading. Now pause here. This is where most people react emotionally. They see the number move slightly in the wrong direction and assume something larger must be happening. But here's what matters. Parallel market fluctuations are not the same thing as monetary policy direction. Let me explain that clearly. Official rate versus parallel market. Why this difference matters. Iraq operates in what economists call a dual-rate environment. There is 1. The official exchange rate set by the Central Bank of Iraq. 2. The parallel street rate driven by supply and demand in the informal market. When you hear exchange shops quoting 152,000 dinars per $100, that is not the official rate. That is the informal market reacting to liquidity, sentiment, and short-term pressures. The gap between those two rates, official versus street, is one of the most important indicators to monitor. Why? Because reform is about narrowing that gap. When the difference shrinks consistently over time, it signals increasing control, improving liquidity management, and stronger institutional credibility. When it widens slightly, as we saw this week, it signals short-term friction. Friction is not failure. Complex monetary systems never move in straight lines. They move in waves, pressure, adjustment, stabilization, recalibration. What matters is trajectory over time, not a Wednesday morning quote. What's driving the mild pressure? Let's zoom out. There are several overlapping factors at play. Global dollar strength. When U.S. interest rates remain elevated, the dollar strengthens worldwide. Investors prefer dollar-denominated assets when yields are high. This affects emerging markets everywhere, not just Iraq. From Egypt to Turkey to Pakistan, local currencies have felt similar pressure over the past few years. So part of what we're seeing is not Iraq-specific weakness. It's global dollar gravity. And when global interest rate cycles eventually ease, that pressure naturally softens. Domestic liquidity cycles, Iraq's economy runs heavily on oil revenue. Oil exports generate dollars, which are converted into dinars to fund salaries and government spending. When public spending increases rapidly, more dinars enter circulation. If dollar supply does not expand proportionally at the same time, people hedge, converting dinars into dollars. That behavior alone can create mild upward pressure in the parallel market. This is not chaos. This is liquidity psychology. Markets are driven as much by expectation as by hard data. Institutional layer versus street layer. Here's where things get important for long-term holders. While the street market fluctuates, institutional reform continues quietly. Electronic payment expansion, banking modernization, foreign currency auction reforms, reserve management discipline. These changes don't generate viral headlines, but they shape the future architecture of the monetary system. Iraq has been gradually shifting from a cash-dominant economy toward more traceable digital financial channels. Why does that matter? Because monetary stability requires visibility. When transactions are digital, liquidity can be managed. When liquidity is managed, gaps shrink. When gaps shrink, credibility increases. This is long-term work. It's not flashy, but it's foundational. Oil revenue stability, the real backbone. As long as oil revenues remain stable, the central bank retains intervention power. Reserves matter. The ability to defend the official rate matters. And right now, oil prices remain within a range that supports Iraq's fiscal structure. That doesn't guarantee appreciation, but it does provide a stabilizing floor. And that distinction is critical. Why small movements matter locally? For Iraqi businesses importing food, medicine, electronics, or building materials, even a slight rate change affects costs. They must decide. Raise prices? Absorb losses? Delay purchases? These decisions ripple into household budgets. Currency stability isn't abstract in Iraq. It directly affects daily life. That's why the central bank prioritizes stability above all else. Not excitement, not dramatic moves, stability. The psychology of long-term holders, let's talk about you for a moment. If you've been in this space for years, you've seen cycles like this before. Mild movement, speculation spike, rumor explosion, then normalization. The people who last in this space are not the most emotional, they're the most grounded. Preparation beats speculation. Understanding structure beats chasing headlines. And the fact that you're still here, still thinking critically, says something important about your discipline. What should you actually watch? Let's make this practical. Here are the real indicators. The gap between official and parallel rates. Oil revenue performance, central bank reserve levels, policy, announcements regarding auctions or banking reform, global dollar trends. Those metrics tell the story. Daily exchange shop numbers alone do not. The bigger question, the quiet question underneath all of this is Iraq genuinely building toward a more credible monetary system? When you strip away rumor cycles and examine institutional behavior, the answer appears to be yes. Slow, uneven, sometimes frustrating, but real. Currency reform is not an event. It is an accumulation of structural improvements that eventually change the equilibrium of a system. That takes time. What changed and what didn't? What changed this week? A mild parallel market fluctuation driven by global and domestic factors. What didn't change? The structural direction of reform. The central bank's stated goals. The importance of watching fundamentals. Markets move. Structures evolve. And disciplined observers remain steady. If this gave you clarity, share it with someone who needs grounding instead of hype. That's how this community grows. Calm, analytical, honest. This is Dinar Stories. Stay patient. Stay prepared. And I'll see you in the next one.